IBM CEO Arvind Krishna joins me now. It's good to see you.
Always good to see you, Sarah.
Well, you know, everybody's rethinking the entire outlook because of the election. How does your view change of what's ahead?
Look, I think taking uncertainty away always helps business. So now we know what we have in terms of roughly. We don't know the exact shape, but we know roughly where U.S. policy will be. I think it is going to lean in favor of innovation. It's going to lean in favor of economic growth. The president-elect has been very clear about that. And I think that's what this nation is founded on. So that, I think, is going to cause tailwinds to spending, both capex as well as technology spend.
So you see an improved picture for your own business?
Absolutely. I think 2025 is going to be better than 2024.
Does that include the consulting business? That was one of the weaker spots in the last quarter. And you were talking about it's not a quick fix when it comes to the discretionary spending from companies.
Yeah. So when I look at the last quarter, I would actually turn around and tell you, I think it showed that the underlying health of the business was extremely good. We grew software at 10%, and consulting was soft. Consulting was flat as opposed to 2, 3, 4% growth, which is what we might have expected. Yes, that comes from people pushing the brakes slightly on discretionary spend. But why? We said we think that's because partly uncertainty, partly geopolitics, partly interest rates and inflation. So if 2 of those 4 get moderated, then that implies that people are going to spend. I also think if interest rates stay moderately higher, then technology becomes a way for people to get their way out of the other costs that come with it. And that, I think, is going to drive tailwinds in 2025. It's always hard to predict by the month, but I'm actually optimistic that we'll see a turnaround there during the year.
During next year, early next year. What about regulation? I mean, you've talked about how everybody's looking forward to a more deregulatory environment, at least in the market. How does that affect your sector in particular, in your business?
Look, I mean, we always need regulation. So let me acknowledge that. Regulation provides guardrails. And this goes back to the very foundations of capitalism, where you say, yep, you need the market to be free, but you need to provide some guardrails so that you don't get bad actors. So we'll acknowledge that. But regulation creates friction. If you give too much friction, as when regulation becomes overzealous, it causes a pause. It causes a massive slowdown, which none of us want, because then the economic growth is not there to propel the economy forward. And I think that may have been a little bit of where we went. So I think that a lighter touch on regulation is going to be extremely beneficial to business. And that means in the end for citizens, employees, and the nation.
Does that include M&A, antitrust regulation? That's where it's been particularly tough in the Biden administration. A lot of people are looking at you to see what your appetite would be to do deals in a different regulatory environment.
Look, if we can get certainty that deals can get done in a certain amount of time, where there's a conversation between the regulators and the business for them to be clear about what they want and what they don't want, then it causes an acceleration in what we can get done. By the way, that causes capital to free up, because that means companies who are private, that money goes back into the market. So I think it actually propels everything forward. From everything I can see, I would predict that M&A volumes in 25 will be quite a bit up from 24 and 23.
What about Gen AI regulation? There hasn't been much of it, but already the president-elect on the campaign has promised to overturn, for instance, the executive order from the Biden administration on AI. What do we expect?
Right. Look, we believe in responsible AI, and we've been very public and talked about that model developers should be accountable and responsible. We want open innovation, not closed. I think the pieces where there was talk in the administration and you could interpret some of the EOs as saying that you need third-party assessment, it just causes, again, way too much friction when it's such an early stage. So being accountable, good. But asking for third-party assessments, I think, is not a good idea. And so we are in favor of a lighter touch on regulation, other than for some extreme use cases where it involves life and death.